This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description.
And we have a little bit of a digestion day again after our lovely AI unwind, which, by the way, was very much concentration risk. Let me show you. Jim Bianco has this post. We knew this already. This was already dispersion unwind warning from last week. Actually, the Tuesday, whatever that was, the 2nd. Yes. Monday, warning about that IGV gap up. Be careful. The EWY Korean ETF top. All right, so that worked. Now, semis, solar, and space really took a header, specifically anything within the AI ecosystem. And one way to really see that is this Goldman Sachs thematic index, which Jim Bianco grabbed. Basically, we know that the AI trade has been pulling the indices higher for all the reasons that technology innovation is concentrated both by investors, but also predominantly passive indexing. So what happened with this unwind last week, which triggered volatility very strongly, but did not trigger lots and lots of disruption in some value plays, shows up really clearly right here. We had a big pullback. S&P obviously was a big component of that. It was Friday down 2.6%. The NASDAQ was down 4.8% at peak to trough. So it was the biggest daily loss for the S&P since October. And it was the biggest dollar loss in NASDAQ all time because we have a much bigger market cap now. But the point is, the S&P without AI was up itty bitty little bit, 0.02%. Long story short, the sell-off was clearly dispersion unwind, AI, concentration risk unwind. The normal world basically just kind of said, okay, we'll take your money. And that's pretty much what happened. It was rotation. Even though we had volatility of size because of the size of the sell-off, you can see that staples really outperformed, financials a little bit green, healthcare also green. It was basically a big hit for technology. So we know that, and materials because of a stronger dollar. Now moving forward, we're going to have to parse this out because we do have some event risks coming in, and that is tonight. First and foremost, we do have, and I'll show you the pre-market map right now. We did have this sell-off that picked up speed, and then in typical order, right? If you get a big sell-off, outliers revert, and it's too much of an expected move on that Friday sell-off. Nearly 3% in SPY, nearly 5% in the Qs. What happened? You get a reflexive bounce. Boom! Right back into kind of an area of support above this green line, which happens to be 715 for the Qs, and let's call it 740 for SPY. So we had our reflexive bounce on Monday. We actually pulled back a little bit toward the end of the day, and here we are sitting pretty much exactly where we hit a high yesterday in both NASDAQ and SPY. So it's that digestion day that I talked about yesterday. Well, tonight we have Trump giving his ultimatum. So we've got another, I don't know how many we've had, but it doesn't matter. 42, doesn't matter. Trump has 8 p.m. as the Hormuz deadline for Iran to open up the Strait of Hormuz and strike a deal. Is that likely? Probably not. But Wednesday's CPI and Friday's SpaceX IPO could absolutely have us revisit these lows. Okay, so CPI will come in likely warm to hot. Why? Because energy prices have been elevated for 100 days? So 100 days ago, whatever it was, February 28th, we had the Trump-Netanyahu war against Iran, which triggered oil spiking into that 120 level. Right now, we have been a firm 91 crude snaking right around there. So we haven't come back down and stayed below, which is a critical break of about 80. So we got a big area or swath of oil volatility. Yes, they can manipulate it very easily in the futures market, and they have done it time and time again on headline or surprise. It's all manipulation there. But what they cannot manipulate as easily is the Bank of Japan and the dollar yen. So yes, we have dollar swaps, and yes, it's a political instrument, the yen. But the point is, we can have escalation, drive oil higher. We can have CPI, drive yields higher. And all of that combined with Trump's ultimatum could cause more volatility in the dollar yen, which might be a little bit more tradable than the oil futures. So for that, just kind of keep that in mind. We go into next week with Bank of Japan and new Fed Chair Warsh. Warsh is not going to want to cut, even if CPI tomorrow says the market has too much inflation and the Fed's going to have to hike. So Warsh isn't going to hike. He's not going to cut. He's just going to kind of maintain despite what happens. And then the Fed falls behind the curve, et cetera, et cetera. You know this game. It's been played before. But the point is, we have until then for some more volatility, which is retesting potential lows. So in the meantime, in between time, we could just as easily go back down and retag the prior lows. So the prior lows were basically that QQQ 709. So here's the level, right? QQQ above 722 is bullish, or we've got 709, which is bearish for a reversion to the mean trade. We'll talk about that once the kind of CPI comes out tomorrow, but that is where we've got some kind of risk off. We do have Apple also, for those that remember, this absolutely 161 fib level, which was a very nice point of price target in blue skies, especially after this trend line started to break higher. We had earnings, which was shake and bake. I said it just has to stay above 265. It did. And then in the month of May, obviously, we had a big explosion higher in all things AI trade, but you can see this gorgeous breakout from 265 Apple. And I had to throw a fib on it because it's a blue skies, and I gave 316. And then last week I said, be careful, because now that 316 is the short-term top for potential pullback into the mean, which is this 10-week with an overshoot to basically the 55. So the 55-day is at 287, and the 10-week is at 292, 293 area. And we just formed last week a bearish engulfing. They came out with their event yesterday. Wasn't very impressive, apparently, because right after hours, they did this big dump of about 5%. So it's sitting from 318. It got just above for a New York minute, just above 317.40, and then dumped all the way to 300. This is Apple, and it's sitting on the 21, and then it comes right down below the 21, hitting the Keltner channel, digesting a little bit right here at this 300 level, which is also a great place for a lot of folks who put protection into this event or post Friday extravaganza volatility in NASDAQ. Long story short, here is your short-term target of 300, but it would not surprise me at all if we have a little rollover back into that 10-week EMA with overshoot to basically 288, 287. So that was a very, very nice target that I gave for weeks of 316. Then we hit it. Literally last week, we overshot it by $1 freaking dollar, came back in because of the Friday volatility. And then we've got the Siri AI, which just did not impress enough to get them above, which is pretty normal. We have a reversion to the mean trade in Apple.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.